Hello everybody, welcome to the Swing Trading Show. Today we have a special guest. We have Mr. Phillipe Cloutier, CEO of Cartier Resources. Technically speaking, we'll look at this company here. Yes, it's a variable graph because it's still keeping its downward trend, but whenever this company is breaking that resistance at 20 cents approximately, that will be a good opportunity for a buy. So Mr. Cloutier will be there to tell us more about his company. So good morning, Mr. Cloutier.
Good morning.
Excellent. So actually there are two drilling campaigns going on in the Benoit project and the Fenton projects, right?
Well, there's actually a drill program was just completed on Benoit.
Okay.
And Fenton, we've decided to postpone it later this year. And we'll see what our partner comes up with in terms of proposals for drilling. And what both of these projects are known historical resources.
Okay.
You know, 100,000 ounces to 70,000 ounces on Fenton. And that's our business model, is to focus on projects that have resources in shallow to near surface, and to focus our drilling directly beneath those deposits to see if it doesn't open up at depth.
Okay. So where could we expect a 43-101 on those projects? Because when talking about historical resources, is it a challenge to?
Well, what the challenge is that the challenge is ourselves. I mean, we've set our bar to 1 million ounces.
Okay.
So it makes no sense for us to try to come up with a resource right now because we've got to do much more drilling.
Okay.
And those attempts have been rewarded with success, because on Benoit we went from drilling the near surface stuff to right down to 650 meters, and we like what we see.
Okay.
And those results will be published in May.
Thanks. Can you tell us a little bit more about the joint venture? You have Benoit, which is one of the main projects where you had some drilling, but you also had Fenton with the government there. So has the relationship been going on with, well, the government with SOCAM, but how has the relationship been going on with you as a wealth creator and SOCAM?
Benoit is a straight shot 100% interest through exploration, whereas SOCAM is a staged acquisition, first 50% with SOCAM, which is a government arm exploration company. Now, any success stemming from that program, what are you going to do? Buy SOCAM shares? They're not listed on the stock exchange. So, and they're a great outfit, very seasoned geologists with a good head on their shoulders, and we're funding and they're operating. Okay. And the asset is in an area that is above the 49th parallel. So technically speaking, the windfall investment or stuff that we'll get from the Plan Noir will be applied to the Fenton project as well as Benoit.
Okay, so, and in terms of your funding, and those guys are drilling, SOCAM is drilling, have there been any challenges in this relationship with this joint venture, or how is everything going?
Everything's going fine.
Everything's going fine.
They're a partner of choice with a lot of juniors and senior companies.
Oh, okay.
So they're used to operating projects. Don't perceive SOCAM as being ministry people. They're really they're seasoned explorers. I mean, they're the ones that found the Cambior-Doyon mine. They also found the Salem deposit and the Neobec deposit. So these guys know what they're doing. They're at a crux right now with the relationship with the government themselves, but SOCAM still continues to explore and attract partners, and we're one of them. And like I say, any success that we have, you're going to have to buy Cartier shares.
Okay, excellent. There's also the Cadillac project. You was looking at one of your interviews on your website, and they were saying that you want to focus on high-grade ore.
Yep.
Can you explain to us what does that mean? Because you also explained to me that with your competitive edge, and can you just?
Well, our competitive edge is to pick up projects that have legs to them. And Cadillac Extension is a perfect example. The deposit was found in the early 90s at a time where copper was trading at 45 cents a pound, zinc at 30 cents, gold at $300 an ounce, and silver at $7 an ounce. The metrics have changed dramatically since then with the new prices of metals. And there are on the Cadillac Extension project intersections that grade up to 6% copper, 14% zinc, 91 grams per ton silver, and half a gram of gold. So it changes the whole picture. And we've only started drilling like the tip of the iceberg. It's a large system, over 5 kilometers long. You know, so we're advancing carefully with this.
Okay. So as compared to Cadillac, Benoit, and Fenton, it's mostly Benoit that you want to be your flagship project. Is that correct, if I understand right?
Yes, of course. I mean, the grades, we're competing with historical grades on Benoit. The first drill intersections in the early 90s were the likes of 6 grams over 50 meters, 17 grams over 21 meters, and that's what we're competing with. We're trying to repeat those grades at depths of 650 meters. If we do that, then we'll rapidly move towards that million-ounce threshold that we're looking for, and obviously that's going to reward our investors.
Have you heard some investors being worried because, you know, like in the 1990s, 1980s, the way people were drilling, the techniques were kind of different.
Yeah.
And right now, you want to repeat the success that the historical data shown for Benoit. So have you seen some worries with some investors concerning that? Are you guys going to be able, with the new techniques, to be able to confirm the historical drilling results that we had in Benoit? How do you respond to that?
That's a very good question. And in fact, the deposit was initially drilled by Minova, a senior company. So this was a play that was discovered by a junior, but actually the historical resource that was drilled off by Minova, a very well-respected senior producer at the time.
Okay.
And the Langlade deposit on Cadillac Extension was discovered and partly drilled off by Cominco, who was then merged with Teck. So we didn't pick up, you know, early stage stuff that was actually drilled off by some fly-by-night operations. We actually drilled up, we picked up stuff that was operated by senior companies.
Okay, excellent. How would you describe your relationship with the local population? Because I think the mining sector sometimes had a lot of challenges sometimes to talk with the population. Is it like First Nations that live there, or mostly?
Oh, it's a bunch of various stakeholders. I mean, and we're lucky because we listed 5 years ago at the time where this social acceptability stuff was just being brought online, and so from the get-go we've mandated independent experts to do the stakeholder mapping for us.
Okay.
And part of my job, you know, in real time, is to call these stakeholders one by one: Chamber of Commerce's, municipalities, First Nations, skidoo clubs, everybody, to make them aware that we're present and to inventory their concerns. So the relationship with these people are excellent. But we, you know, granted, we're in the Abitibi, so there's people recognize the presence of mining companies.
Okay.
And they're very, you know, they'll tell us what their concerns are, and we'll address those concerns. So the relationship is excellent because we stay in an area where mining tradition and culture is well accepted.
You also mentioned on your website that you guys were environmentally friendly. You also received an award for that recently. So how does that, be able to increase the acceptability of the population? Is it something you want?
We received the prize because of that stakeholder map. You can go on our website, and those documents are there. We received the awards partly because of that that work that we did, and the accountability and transparency. We put it up on our website, and it's facilitated us a lot in the discussions we've had with the groups. And in fact, our competitors are picking up on the model that we've put forth.
Okay.
And what's interesting about it is it's really low cost for a junior company to do, but it is a must, because by developing good relationships, if we do stumble on a major discovery, then that acceptance process is already underway. And I think the investors, the analysts, that's what they want to hear. They don't want to hear you've discovered something and then find out you'll never be able to bring it into production.
Yeah, exactly. Now let's talk about money now, because you've raised your funding in 2012, a lot of money. So how much money do you have right now in the bank?
Over $3 million.
Over $3 million.
And no obligations. So we're sitting with relatively a lot of cash for a junior company. The projects that we have do not require, you know, expensive obligations in short to medium term. So right now we're in, you know, hunting mode. We're preparing to seize new opportunities as well as advancing our exploration projects.
And have you been able to map all those opportunities that you want to seize for this year?
Yeah, that's underway.
And approximately how much you think you guys could turn it? Do you think you guys gonna are going to spend
In the next year?
Yeah, this year or the next year.
On the books, we have a $1.3 million exploration budget, and we'll stick to that.
Okay.
We're monitoring the markets right now. Our competitive edge is precisely the fact that we have cash, that we have a low burn rate, that we have a focus in the Abitibi where, granted, like the projects are inexpensive in terms of logistics and access, and that's our hunting ground.
Okay.
And we explore in a window of opportunity where most juniors don't, because they do early stage exploration, and where most seniors, don't go because they figure the deposits are too small for them at that point. So we cash in on that, or we exploit that window of opportunity for the better of our investors.
And talking about investors, what do you say about some investors that might fear that, this company, yes, they have good projects, they want to drill, they have some cash, but at a certain point they will need to ask the market for some financing. So what do you say for investors who fear a possible dilution of your shares? Because if you guys have to go to the market to drill, let's say you found a nice target of the Benoit project and you have to drill to delimit the zone.
Well, that's
How do you respond to those fears?
That's a good concern that the investor should have. My answer to that is that if we have to continue to dilute and raise money, it will at least be in a very controlled and limited fashion, and the raise of that will be going on targets that can actually create additional ounces in the ground, and not just answer a geopoetic drill target. So the dilution issue is always going to be there. But we believe that if we do have to go there, it's going to be for the better of the investor.
Excellent. We'll have one question from the audience. Bingo asked us, do you have enough money to drill on both of your projects?
No.
No, okay.
The level of drilling we would like to do to advance, no.
Okay.
Enough for one project.
Which would be?
Which would be Benoit.
Benoit, okay.
And frankly, the size of company that we are, we're gonna always focus on one project, but there's always a plan B and a plan C. And it is an asset that we have, that all of our projects do not have obligations. We have assessment credits to last us 2 decades on most of our projects, and the deals that we've structured with our partners give us a lot of breathing room.
Okay, excellent. So, what was your impression out of the PDAC conference? The mood that you see from investors, especially with the new government that has been placed in Quebec, doesn't necessarily friendly with the business environment there.
The one word that would summarize the mood there was depression. All right. Most people were depressed. The investors were depressed. The analysts were depressed. But when you put yourself in the shoe of me, a CEO of an exploration company, well, that, for me, are the ingredients for success. I mean, opportunities are created there. People will actually, in some situations, have to, surrender their projects. And so we can pick and choose. And frankly, if you're an explorationist, you have to be an optimist, and you have to be enthusiastic. And if you're not, then get out of the business. The cycles come and go, governments come and go. So there are political situations right now that may create some uncertainty. But like I say, politicians come and go.
Okay.
The business, the entrepreneurs that have created the mining industry are here to stay, and the PDAC, attracts people from all over the world, and for a simple reason. Here in Canada and in Quebec, we know how to do things. We know how to create wealth, and we're asking our governments, let us do our job and do yours.
Excellent. So one last question, because technically speaking, I was looking at your graph. I was saying that Cartier Resources should be put on your watch list, because if ever it reverses its downward trend, that's going to be a nice opportunity for a buy. But fundamentally speaking, the investors watching you right now who have not heard from your company right now, 3 reasons why you should consider your company as a buy. Why the story of Cartier Resources is giving it a competitive edge as compared to the other projects that are on the horizon, around the area, I mean.
Our approach to exploration is simple.
Okay.
It's time-tested, it's realistic, and it's doable. And we invest our money on projects that have, demonstrated potential. And we're cashed up to do it, and we want to do it, and we're prepared to seize additional opportunities. So that's the message. Go to our website, give me a call. I'm there. That's my job, is to answer your questions, and I do hope you guys become investors.
Excellent. So, Mr. Cloutier, thank you for coming by. In the next 6 months, we'd like to invite you back to give a follow-up to our viewers. So thanks again for coming by, Mr. Cloutier.
Thank you very much.
Thank you.